What's up guys, welcome back to my YouTube channel, it's Amas. Today, this is going to be a recap video of all the trades you could have caught on Thursday, May 22nd. Let's get right into it. So first thing you want to do when the market is opening is marking out your 15-minute fair value gap. So right here, as you can see, we have a fair value gap right here that is bullish. And what is this fair value gap telling me? It's telling me that the buyers are the one in control and that we will most likely see a potential short-term reversal in the market if we can absorb all the sellers inside of this zone. So right here you can see it's 9:15 and the market is still not open. In 1 minute it will open. So right here 9:29, this is the zone that I'm going to be trying to play a potential reversal from. So right here, let's wait for the market to opened and tapped my 15-minute fair value gap. So right here, what do I like about this scenario? It's that it tapped the 15-minute gap without even closing a singular handle inside of it. And that is a really strong confirmation that price was reacting algorithmically from the fair value gap. So right now we tapped the 15-minute zone. I know my buyers absorbed all the sellers that try to push price down. What is my next confirmation? I look for a leg that has one singular fair value gap on either the 1, 2, 3, or 5-minute chart. And if we do have that, I wait for this leg, so this fair value gap here inside of this leg, to get disrespected so I can take longs in the opposite direction. Okay, so right here, this is exactly what we get. So we tap the 15-minute gap. I know this zone is most likely going to give us a potential reversal in the market. Then second thing, I mark out this bearish fair value gap, which is telling me, okay, the sellers are being aggressive. If we are truly bearish, okay, if we're truly bearish, we should respect this fair value gap to create new lows and dig deeper inside this 15-minute gap. But if we're bullish, we will disrespect that fair value gap, pull back to it, and then give us an entry for a 1-to-1. So right here, I will wait for price to disrespect this gap and I will look for potential long entry. So right here, boom, we disrespect it. This is where I will take my longs. I will not, enter market right here. The RR is not a good scenario to enter on market because your stop loss would be at an area where it does not really make sense. Right here, you would wait for price to pull back where you expect those sellers to cover the position. And right here, you would go for a 1-to-1 targeting this internal high right here. So let's wait for us to see a pullback. This is exactly where you get the pullback. Almost hit your stop loss. Chops. And as you can see, in a few minutes you hit your target. So the first trade was the same exact framework I keep talking about in every single video, but right here I really love this trade because we did not see any candle closures inside of the 15-minute gap, which was an extra confirmation. So if I have to recap this trade again, the first criteria that we have for this model is to tap a 15-minute gap. The 15-minute gap is your framework to determine your bias. 15-minute gaps, let's say this is a 15-minute bullish fair value gap right here. What does that mean? It means that there are buyers right here that are passive that are going to be willing to defend their position to create new highs right here. Okay, so what is my first criteria? I need price to tap a 15-minute fair value gap. This is exactly what we get here. So we tap the 15-minute gap. Then what is my second criteria? I want us to create a leg that has a singular fair value gap on either the 1, 2, 3, or 5-minute chart. Okay, when we tap the 15-minute gap. So right here you can see we are on the 1-minute chart. We tapped the 15-minute fair value gap, and when we entered inside of that gap, we entered with aggression. We created a bearish fair value gap on the way down, which told me that, okay, the sellers right here are trying to push price down. This is exactly what I want to see. I want to see aggression when we enter into a level where we expect a potential reversal. Why? Because I can locate where the participants are in the market. Right here, I can locate them inside of this fair value gap. So fair value gap being this one. The sellers are located between this candle's low, this candle's high right here. So for me, the next question I ask myself, if we're truly bearish, we should respect this fair value gap to create new lows and dig deeper inside this 15-minute gap. But if we're bullish, we're going to disrespect it, wait for the possible pullback to the covering area, and this should give us a one-to-one entry back to the upside. So this was the first trade. As you can see, the trade that we took was a bounce from this 15-minute bullish fair value gap, and we caught the distribution back to the upside. What am I going to do next? I am going to scale down to the 15-minute chart again, and I will look for a price to enter inside a 15-minute gap again. Okay, so right here, what do I see to the left? Right here, I see that there is a huge 15-minute gap. What is this gap telling me? It's telling me that there's a lot of sellers that will be ready to defend their position right here. Okay, on an intraday volatility scalp model, you don't need anything else than a 15-minute fair value gap. Okay, this is the most accurate time frame to find short-term reversals in, and right here, this is exactly what you get, a big 15-minute bearish fair value gap. So you expect that if we enter inside of this fair value gap aggressively, okay, if we enter inside this 15-minute fair value gap aggressively, and there is a lot of buyers inside this leg, and then sellers absorb those buyers and disrespect the fair value gap created when we entered inside this 15-minute zone, bearish zone, you should have a one-to-one risk to reward trade back to the downside to play a reversal. This is exactly what I'm looking for right now. I will wait for price to enter inside this 15-minute zone and look for a potential reversal back to the downside. Scale down to the 1-minute chart, and let's see what's happening right here. As you can see right here, we just tapped this 15-minute zone. So this is my first criteria. I need us to tap a 15-minute bearish fair value gap. Okay, this is my first criteria. What is my second criteria for this model? I need the leg that entered inside the 15-minute zone to be a singular fair value gap. Okay, from the swing low to the swing high that entered into the bearish zone, so the bearish 15-minute gap, it needs to be a singular fair value gap on either the 1, 2, 3, or 5 minutes. So right here, I'm on the 1-minute chart, and this is exactly what we get: swing low, swing high, singular fair value gap. Why do I want this fair value gap to be singular? I want to be able to locate exactly where are my buyers, where are my sellers. So right now, what is the question I'm asking myself when I see the singular fair value gap? I'm telling myself, if we are truly bullish, we should respect this fair value gap to create new highs and dig deeper inside this 15-minute zone. But if we're bearish, we will absolutely disrespect this fair value gap, and we will have a short setup back to the downside for at least a 1-to-1 risk to reward ratio. So right now, we will wait for price to inverse this fair value gap, so we can literally see in real time that the buyers will get squeezed. Okay, we know they're located inside this fair value gap, but we want to see them get absolutely disrespected, so we can know the sellers are in control, the buyers are getting squeezed, we have a lot of chances of going lower. So right now, let's see what happens right there in this price action. Boom, this is exactly your third confirmation. When you see this candle, this is your third confirmation, because you disrespected the fair value gap that got created when we entered into the 15-minute zone. So you have two options right here. It's either you enter market because you like those aggressive plays, or you enter on the pullback. The pullback entries are usually the best ones because they give you a better RR, and you see a lot of covering happening inside those 1-minute inversions. Okay, 1 minute, 2 minute, 3 minute, or even 5. So right here, what I will do is that I will wait for price to pull back, fill me in on the cover here, so on this inversion fair value gap, and then I will go for a 1-to-1. I will wait for price to pull back into this zone right here, which is my inversion fair value gap. This is where I get in, and you can see in 1 minute you hit your target. If I have to recap this trade again, as you can see, we tapped the 15-minute bearish fair value gap, so we expect a bearish reversal. Then we created a singular fair value gap right here on the leg that entered into the 15-minute zone, which told us where were the buyers, where were the sellers. Right here, this was a bullish fair value gap, so we knew the buyers were located inside of this gap. If we're truly bullish, we should respect the zone to create new highs. If we're bearish, we will disrespect it, which is our third criteria, inversion fair value gap. You wait for price to pull back to your entry right here inside the inversion, stop loss above the high, TP at a 1-to-1. This is your second trade. Right after taking the second trade, I will look for another possible opportunity. Why? Because right here in this chart, I can see that when we distributed inside those three candles right here, it was pretty aggressive and it led to a fair value gap creation on the 15-minute chart. As you can see right here, we formed a 15-minute fair value gap. So for me, if we enter inside of this zone and we see price disrespecting a bearish fair value gap, we will most likely see at least price pulling back to the upside and giving us a reversal play for a one-to-one risk to reward. Now I just scaled down to the 2-minute chart and let's see if it gives us an opportunity. Right now, what am I looking for? I'm looking for a possible reversal if we tap this 15-minute bullish fair value gap, and I need us to enter aggressively inside of this fair value gap to be able to locate my participants in the market. So right here, I will wait for price to enter inside of this zone aggressively. So right here, we just entered this 15-minute fair value gap and we created a bearish 2-minute fair value gap on the way down while entering the 15-minute bullish zone. So what is happening inside of my head? I'm like, okay, if we're truly bearish, we should respect this fair value gap to create new lows and dig deeper inside this 15-minute zone. But if we're going to be bullish, we will disrespect this fair value gap right here, and we will see a potential move back to the upside for a one-to-one risk to reward ratio. So right here on this third candle, this is exactly where you disrespect this 2-minute gap. You will want to put your limit order right inside of this pullback, inside this inversion fair value gap, and you will go for a one-to-one risk to reward ratio right here. So let's see what's happening right there. So you get filled inside of this candle, and you can see in few minutes you do not hit your target. So this is a really good trade you could have caught, and as you can see, it lost, but it was the same exact framework as every single trade that I ever recapped on this YouTube. So this is super important to note. No strategy has 100% win rate. You will see losers, and this is a really good loser that you could have caught. Okay. In this example, we can see exactly what trading is all about. Can you take this really good loss and not freak out? Okay, can you take this loss and come back the next day with the same strategy, the same set of rules, and with the same risk management parameters? Okay, a lot of people will take 2-3 losers in a row and will start tweaking and will start saying to themselves that the strategy does not work, but it does not work like that. Okay, the wins and losses are completely random. This is a random distributions of win and losses, so you need to be able to take those losses to the chin and come back the next day, or a little bit later inside of the day, and be able to take the same setups, trust your setups, and trust your analysis and your backtesting data on the edge. So right here, this was a really good setup. You have nothing to learn from this loss. Every single criteria was respected, but it was a loss. Just take it exactly to the chin and come back either on the PM session or the next day with the same exact approach. So right here, we're still inside of this 15-minute fair value gap. Even if we just took the loser right there, we could have a potential long opportunity back to the upside. Okay, so right here, this is something I really like. Again, so we just took the loss here, but if you are strong mentally, you will look for other trades and you will respect the framework and respect your rules. Right here, we're still inside this 15-minute bullish fair value gap. You expect price to reverse and dig really deep inside this 15-minute zone. So right here, the 2-minute chart, you can see there's multiple gaps. So this is not really time frame that you want to look for the possible cover. So right here, you can see there's a gap here and another smaller gap up inside of this low swing point. So from this high to this low, there's 2 gaps. So there's this is not the time frame you want to use to locate where are the sellers in the market. So right here, you will want to scale up to the 3 or 5-minute chart to see is there a singular gap. And right here on the 3-minute chart, you can see there is a singular gap located right here. So this is where your sellers should be located at for the possible covering. So this is another good opportunity. You tap the 15-minute zone again. You have a 3-minute inverse back to the upside. You will put your limit order right here, stop loss right below this low, and your TP right at a 1-to-1. Okay, trust the framework, trust the model right here. It's not because you just took a loss that you will immediately start changing strategies and start tweaking. Okay, so now let's see when you're gonna get picked up. Right here, you get picked up inside of this candle. Let's see what it does. And in few minutes, you hit your target. So this is a really good example of what trading actually is. You take a loss right here, but you follow your plan and you take your money back from the market by following your plan. This is super important. So right here, inside of this day, we took 4 trades. 3 of them were winners, 1 of them was a loser. So you're currently up 3 Rs. Okay, looking at the same exact framework, same exact time frames for your entry models. So right here, pretty accurate trading. Now, after taking my 4th trade, I will scale down again to the 15-minute chart and look for other possible opportunities. So right now, I have this 15-minute bearish fair value gap that I can reuse if we sweep the highest high that entered inside of it. Okay, so right here, we have this high that just entered inside this 15-minute zone where we took the short right here, okay, at the top of this candle. We predicted the shorts right here, and for us to recycle this gap and to use it as a potential reversal play back to the downside again, we need to sweep the highest high that entered inside this 15-minute zone, which is buy-side liquidity. You want this buy-side liquidity to get swept and then see a potential move down. Same thing for this fair value gap down here. For me to reuse this fair value gap, I need us to sweep this internal low, okay? I cannot look for longs when price gets super close to this low and retaps an area that it already filled, okay? For me to reuse this gap, I need us to sweep the lowest low inside of this fair value gap right here. So sweep sell side, be aggressive while entering inside this bullish fair value gap, disrespect it, and see a potential move back to the upside. So right here, boom, this is exactly what we get. We sweep buy side inside the 15-minute zone, so we expect a potential reversal if we can absorb those buyers inside of this price tag right here, which is the 15-minute bearish zone. So right now, I will scale down to the 1, 2, 3, or 5-minute chart to see where are my buyers. Okay, so right now, boom, scale down to the 1-minute chart. And here, inside of this leg, what am I seeing? Okay, I'm seeing that there is a 1-minute fair value gap right here inside this, from this swing low to this swing high that just tapped the 15-minute zone. So I'm like, all right, we just have this 1-minute fair value gap, but that doesn't mean that this is the right time frame to look at to predict where are my buyers. Okay, I need to go down to the 2-minute, 3-minute, and 5-minute chart to see is there any gaps here on those time frames on a higher time frame than the 1-minute that could lead to a possible loss. So right here, we'll go to the 2-minute chart. Right here inside of this leg, there is no gaps, so I cannot use the 2-minute to locate where are my buyers. So right here, we'll go down to the 3-minute chart, and on the 3-minute chart right here, we see there is a gap here that is pretty accurate. So there is a gap lower than the one that we used on the 1-minute chart. So I will wait for the highest gap from the 1 to 5 to get disrespected. This is super important. This is something that I did not talk about a lot, but for you to take the trade, you need the highest time frame, the fair value gap that got created on the highest time frame from the 1 to 5 to get disrespected. So right here, you're still inside this 3-minute fair value gap, even if you disrespected the singular gap on the 1-minute chart right above you. Okay, so right here, you need to close below the zone here to get a possible short signal. So let's see what it does when you close below this 3-minute gap. Still weakening it right here. This is exactly where you disrespect the 3-minute fair value gap. But the swing, from the swing high to the swing low, this is way bigger. So this is, you're playing it as a 3-minute play right here. So from this swing low to this swing high, so there's no gaps below you on the 3-minute, no gaps on the 5. So right here, you will wait for price to pull back to your zone, which is your inversion fair value gap right here, and then put your stop loss right above this high and aim for a 1-to-1 risk to reward. Let's see what it does right here. So you get filled inside of this candle, goes back deeper, and in a few minutes you hit your target again. So the same exact framework as you can see, but something that is really important right here is that I did not take the trade on the 1-minute because there was a gap on a higher time frame than the 1-minute that was still active and still getting rejected. This is super important. So right here, if I have to recap this trade again, first criteria that we have, tap a 15-minute gap right here, bearish gap, so we expect some downside. Second part right here is, do you have a singular fair value gap from a swing high to a swing low that entered the 15-minute zone, either on the 1, 2, 3, or 5-minute chart? Right here, this is exactly what we have. Boom, this fair value gap right there. What is this fair value gap telling us? Where are my buyers? And if we're truly bullish, we should respect this fair value gap to create new highs. But if we're going to be bearish, we will disrespect this fair value gap and see it move back to the downside. So right here, the third criteria was exactly on this candle when we disrespected the area where the buyers were located. My third criteria right here, boom. And as soon as we disrespected this zone, you put a sell limit order on the inversion fair value gap with your stop loss right above the internal high right here that tapped the 15-minute zone, and you go for a 1-to-1 play. So right here inside of this day, we took 1, 2, 3, 4, 5 trades. Okay, we took 5 trades. One of them was a loss, and imagine if you took that loser right here, which was our loss. Okay, if you took that loser and you stopped, let's say you started to not manage your risk properly, and you started to change your strategy or enter into trades that were not your strategy, then imagine what you could have missed out on. Okay, 2 other really good opportunities. So on this day, you took 4 wins, 1 loss. So it ends up being a 3R profit day, which is really, really interesting. The same framework, the same way to read price. You use your 15-minute zones to know exactly what is your bias. Okay, in an intraday scalping framework, you don't necessarily need a bias on the daily chart. You need reactions. You need to see where are your buyers, where are your sellers, what setups has the potential to give us a little drive back to the upside or a little drive back to the downside. This is the only thing you need to be a scalper. You don't need to forecast a huge move and know exactly what is happening on the higher time frame. No. You just need to have the right approach on the lower time frames and know what zones work and what zones do not work, and what is the timing that you should take and what is the entry that you should take. So I appreciate you guys for sharing love on every single video that I post. This is the second recap that I did. Hopefully you guys enjoyed it. See you guys on the next one. Peace out.